For 5 months in a row, home prices in Canada have been on the rise, but we might be starting to see a shift now. For the first time in those 5 months, we saw the national average price in Canada drop. But this hasn't shown up yet in the composite benchmark price. And while some cities continue to see prices increasing, others have seen a small decline. Is this a seasonal shift, or after 2 interest rate hikes, is this a market shifting again? Let's find out. Hey there, and welcome to another monthly Canadian real estate market update here on Bald Prairie Real Estate. My name is Matthew Pfeifer. I'm a real estate agent in Regina, and that is my trusted assistant, Matilda. This is the most comprehensive national look at the Canadian real estate market you're going to find on YouTube. So if you love learning about Canadian real estate, you want to keep up to date on the market, give this video a like if you liked it, hit the subscribe button to keep up to date on Canadian real estate. And after you've watched this update, if you are still thinking about buying a house and you want some help there, I've got a link to my calendar where you can book me in for a buyer's consultation. I'm going to give you a call, find out what's important to you, and I can get you paired up with the best real estate agent in your market. But let's start off with another one of my terrible bad dad jokes. Why was the pediatrician always losing his temper? Because he had little patience. If you have a terrible joke that I can use in a future episode, put in the comments below. Let's get into the market update. The 705 homes sold in Victoria last month is down 8% from the 5-year average of 762. Now, this is the time of year typically sales slow down in Victoria, but percentage-wise, it was larger than expected. And the almost 1,300 homes newly listed for sale is also down 2% versus the 5-year average of a little over 1,300. Again, like sales, this is the time of year we expect new listings to also decline. But when it comes to active inventory, the 2,300 homes currently for sale in Victoria is exactly equal to the 5-year average, and that leaves months of inventory at 3.3, meaning Victoria is a balanced market. When it comes to home prices in Victoria, the composite benchmark price is a little over $880,000. That is down 8% year over year, and it's down about 12% from the peak we saw in June of last year, about $995,000. Agents in Victoria are telling me it's nice to see the market return back to normal and seeing seasonality, because the last couple of years, there hasn't been seasonality in the market, and the market definitely hasn't been normal. Now, sales did drop more than what we expected, but new listings in inventory are kind of starting to get back to where they should be, and that's bringing that mark back to balance. That's why months of inventory is back to balance. This is better for both buyers and sellers to have some stability in the market, and they're expecting that this will continue going through the next couple of months. The 2,900 homes sold in Vancouver last month is not only up 5% from the 5-year average of about 2,800, it's also the second busiest June they've had in the last 5 years, second only to June of 2021. And the 5,400 homes newly listed for sale, well, that is down 1% from the 5-year average. So call it basically a 5-year average, and that is a good thing to finally see new listings starting to normalize. But there's less than 10,000 homes currently for sale in Vancouver. That means active inventory is down 16% from the 5-year average. Typically, there's closer to 12,000 homes for sale this time of year. But it does mean, though, that months of inventory is at 3.3, meaning Vancouver trended back into a balanced market. When it comes to home prices in Vancouver, the composite benchmark price is $1.2 million. It's down 3% year over year. It's down 5% from the peak we saw of $1.26 million in April of last year, and prices are up 8% since January. Typically in June, the Vancouver real estate market starts to turn a corner. It goes from that busy spring market to a slower summer market. So let's talk about just month over month changes from May to June of what we would typically expect to see. So generally, sales drop about 9%. This year they dropped 13%. New inventory will typically drop 9%. It dropped 6% this year. And active inventory will usually increase a couple of percent. This year, it increased about 7%. Of course, the giant elephant in the room is the Bank of Canada raising interest rates again. Now, a couple of 0.25% interest rate hikes materially doesn't impact the market significantly, but psychologically, it has a significant impact on the market. And if there is a fear that interest rates will continue to rise, that will have a very similar impact to what we saw last year, where a lot of buyers said, okay, I'm unsure about buying right now in this market. I'm gonna take a step back. And I wouldn't be surprised if we see, combined with the summer slowdown, a similar result in Vancouver. Now, one really interesting thing that I did hear when I was talking with real estate agents is what's going on with single family homes, because those prices are increasing and there seems to be a lot of activity there. And their thoughts are that because now in Vancouver, where there's no longer single family zoning, you can build up to a 4-unit building on a single family zone, good lots in good locations are being bought up because builders are hoping to eventually upzone these into larger properties. In Calgary, they had another extremely busy month with almost 3,150 homes sold in a month. That's up 41% from the 5-year average. Usually it's about 2,200 sales in the month. Now, the number of homes newly listed for sale at almost 4,000 is actually up 6%. And I've been waiting for this to happen. We've been seeing this as a trend, more and more homes getting listed. I was fully expecting they'd finally break that 5-year average, and now they have. But when it comes to homes currently for sale, there's less than 3,500 homes currently for sale in Calgary. That's down 50% from the 5-year average. Usually about 7,000 homes would be for sale this time of year. So months of inventory is at 1.1. Calgary continues to see the tightest inventory situation across Canada. So it should come as no surprise that home prices continue to increase. That composite benchmark price, $565,000. That is up 4%, and once again, a new all-time high. Now, agents are telling me it's really nice to finally see a little bit of more inventory coming on the market in terms of new listings, but active inventory is down so much. It's not only down versus last year where inventory was very tight. This is the lowest number of homes that Calgary has seen for sale in the month of June in 20 years. Now, one other thing that they're seeing a lot is the sale of downtown condominiums, and it's being purchased by foreign buyers. Now, I know you're saying, I thought in Canada we banned foreign buyers. Well, these foreign buyers are from Toronto and Vancouver. There is a massive amount of money flowing in from those two centers because Calgary is now Canada's new gold rush when it comes to real estate. And typically June is the busiest month for home sales in Calgary. And so I'm expecting a drop off in sales when we see the July numbers. But with how hot the Calgary real estate market has been, I wouldn't be surprised if they break a trend there. In Edmonton, the almost 2,600 homes sold in the month is up 18% from the 5-year average. Typically, that number is about 2,200. And the 3,700 homes newly listed for sale is down 3% from the 5-year average. Typically, close to 3,800 homes are newly listed for sale in the month. But the 7,100 homes currently for sale in Edmonton is down 17% from the 5-year average. Usually about 8,600 homes are for sale this time of year in Edmonton. So months of inventory is at 2.7, meaning Edmonton is a seller's market. When it comes to home price in Edmonton, the composite benchmark price is about $380,000 right now, down 6% year over year. It's down 6% from the peak we saw this time last year, about $410,000, and it hovered at $410,000 for April, May, and June last year. This is going to be a theme you're hearing a lot in this video, and that is that this is the time of year that typically the Edmonton real estate market will slow down. So June is generally when you see sales and new inventory peak out, while July is when we see home prices and active inventory peak out. Now, for the last year, basically, Edmonton has been the closest thing we've seen to a quote-unquote normal market. And so to see Edmonton basically normalizing sooner than everybody else is kind of what I expected. Now, agents are telling me, though, the average days on market is 40 at Edmonton, but like all averages, that can be deceiving. The homes that show well, that are priced well in good neighborhoods are selling significantly faster than that. Seeing them sell the first couple of days, the first weekend on the market is still very common. The almost 370 homes that sold in Regina last month is up 6% from the 5-year average, typically about 350 homes a month, but it is a significant drop from last month's over 400. While the 540 homes newly listed for sale in the month is down 8% from the 5-year average, typically closer to 600 homes are newly listed for sale in the month. But active inventory continues to be stubbornly low in Regina with only 960 homes currently for sale. Not only is that down 32% from the 5-year average, we typically expect to see over 1,400 homes for sale this time of year. It is down 16% from last year. So months of inventory in Regina is 2.6, still very squarely citywide in a seller's market. When it comes to home prices in Regina, they continue to rise. The composite benchmark price, $318,000. That is down 3% year over year, down 3% from the peak, which was exactly a year ago, of $330,000. June is when we typically see the Regina real estate market shift from the spring market to the summer market. So you see a slowdown in new listings and in sales. Those generally peak out in June, while active inventory and prices generally peak out in July. And since I'm filming this the second week of July, a lot later than I normally do, we're seeing that in our first couple weeks in July, things have been a little bit slower. But that stubbornly low inventory, again, less than 1,000 when we should have 1,400, is a problem for buyers. I have buyers coming in from Saskatoon. They'd sent me 12 places they wanted to come in and see. 10 of them were already conditionally sold. So that lack of inventory is a real problem for those out looking at houses right now in Regina. With 541 home sales a month, Saskatoon was up 14% versus the 5-year average, typically about 475 homes selling a month. And the less than 800 properties newly listed for sale is down 15% from the 5-year average. Usually about 850 homes would be put up for sale in the month. And with less than 1,100 homes currently for sale in Saskatoon, that's down 48% from the 5-year average. Usually closing in on 1,700 homes are for sale this time of year in Saskatoon. So months of inventory is at 2. Saskatoon is quietly one of the hottest real estate markets and the lowest inventory situations in Canada, and nobody's really talking about it. When it comes to home prices in Saskatoon, the composite benchmark price is $381,000. That is equal to last year. I thought going into the month that Saskatoon might break that all-time high of 383, but they didn't quite get there. It's generally May that the Saskatoon real estate market kind of sees its market activity peak. Sometimes it's June, but May or June, that's generally when it peaks out. And so to see that market in Saskatoon still being really busy right now tells me that there's a little momentum still left in that Saskatoon real estate market. But I am expecting when the July numbers come out that we are going to see a slowdown. That's what typically happens in Saskatoon. You see a significant slowdown in July. Everybody takes their holidays, very common, and sometimes they'll pick up in August. When I'm talking with agents in Saskatoon, still single family homes priced around $400,000 around the east side of town. That's what's seeing the most activity. That's where you're seeing multiple offers still. So if you're looking for that, expect to potentially have some competition. The 1,600 homes that sold in Winnipeg last month is down 13% from their 5-year average, typically about 1,850 homes selling a month. But the 2,400 homes that were newly listed for sale is down 10% from their 5-year average, about 2,600. And the almost 4,200 homes currently for sale in Winnipeg is up 8% from the 5-year average of about 3,900. Months of inventory though is 2.6, which means Winnipeg is still a seller's market. I am not expecting that to last. I think we're going to be back in a balanced market when we go look at these stats next month. When it comes to home prices, the composite benchmark price in Winnipeg is $348,000. That's down 3% year over year. It's down 5% from the peak of $370,000 that we saw roughly a year ago. Now, the keen-eyed viewers will notice that last month I reported a composite benchmark price of $351,000. This time every year, Canadian Real Estate Association goes back and they tweak that composite benchmark price to make it a little more accurate. Sometimes those numbers fluctuate a little bit. So they did this past year when they did that. Last month, instead of being $351,000, they actually revised it down to $348,000, but the percentage change is typically the same, and it is this time. Now, when I was talking with agents in Winnipeg, they were saying how this was, of course, the strongest month for sales they've seen yet this year, still down from that 5-year average. But again, that $300,000 to $500,000 price point, specifically single family homes, that's where they're still seeing the most competition, and multiple offers are still happening on homes that are showing well, that are priced well. That's absolutely still happening. But with inventory starting to normalize, they are expecting that pressure on buyers to start reducing. The approximately 7,500 homes sold in Toronto last month is down 13% from the 5-year average of 8,600, and it's still 15% higher the number of homes sold last year. That just shows how weak the sales were last year. The approximately 15,800 homes newly listed for sale in Toronto is down 1% from the 5-year average of about 16,000. And 1 month doesn't make a trend, but this is nice to see this basically within that 5-year range, because we've been seeing Toronto new listings being down 20+% for pretty much the entire year. But the 5-year average is also heavily skewed by the 11,000 homes that were newly listed for sale in 2021. In fact, if you go back the last 7 years, only 2 years we've seen fewer homes newly listed for sale. So while some people are calling this a surge of new listings in Toronto, in comparison to what we typically see, it's not really that yet, but I have a feeling that could change. But the 14,000 homes currently for sale in Toronto is down 14% from the 5-year average of over 16,000. So that means months of inventory is at 1.9. But again, like new listings, I have a feeling this is going to change dramatically when we see next month's data, and I'll be talking about that in a minute. When it comes to home prices in Toronto, the composite benchmark price is $1.17 million. That is down 3% year over year. It's down 13% from the peak we saw last year of about $1.33 million. That was in March of last year. But it's 5 months in a row that home prices in Toronto have increased, But I got a feeling that trend is going to reverse next month. Okay, so I'm clearly hinting that I think things are going to change in the Toronto real estate market. We're going to see a shift. And part of that is because of the fact I'm recording this a little later than I typically do. Sorry, life got in the way the last couple of weeks here, and I've got that out as soon as I wanted. Generally, new listings peak out in June. I'm not sure if that's going to be the case this year's not. Active inventory typically peaks out in June as well. Again, I don't think that's going to be the case when we go back in a couple of weeks and look at the July numbers. And that's because agents, as I talked to them, they said last month how they were seeing an increase in listings for apartment style condos that were tenant occupied. So investors, they're trying to get rid of some of their rental properties because very likely with variable rates going up so much that these properties no longer have a positive cash flow. And we're seeing a similar trend with new or almost brand new construction units. And this, I'm actually surprised took this long to filter into the market, because leading up to this year, the expectation was a significant number of pre-construction units would be completed in the first half of this year and turned over to these owners that had bought them as pre-construction properties. Generally, many of them were investors. Some of them were hoping to use these as rental properties. And of course, now with interest rates, how much they've gone up, these don't cash flow anymore, so they don't want to take possession. They're trying to sell these, or they no longer qualify for the mortgage. They never had intended to actually purchase this property. They were just going to flip it out to somebody else with the anticipation this property would be worth more in the future from when they bought it. And that may no longer be the case because obviously prices have declined. So now there's a scramble to get rid of some of these properties from investors. Now in a normal year, and I know there's been nothing normal to the Toronto real estate market for a couple of years, and some people would say longer than that, but typically home prices in Toronto increase through the spring, they fall off a little bit in the summer, they pick back up in the fall, and then fall back off in the cooler winter months. This year, we kind of overshot that spring increase. Prices increased more than you would typically expect. So I also expect that we're going to see that slowdown in prices. I think we're going to overshoot on the way down as well. So I'm kind of expecting prices will decline more than we typically see them do in the summer months. The truth really is going to come out in the fall. If we see prices and sales and market activity rebound in the fall like it typically would, that's indication the market is normalizing. If it doesn't, that's an indication of a market shifting downwards, kind of like what we saw last year. The almost 1,700 homes that were sold in Ottawa last month is down 16% from the 5-year average. We're typically closer to 2,000 homes selling a month. And the almost 2,800 homes that were newly listed for sale is up 10% from the 5-year average. Typically about 2,500 homes are newly listed for sale, while the 3,200 homes currently for sale in Ottawa, well, that's up 2% from the 5-year average. Generally about 3,100 homes are for sale this time of year. When it comes to months of inventory in Ottawa though, it's 1.9. That means Ottawa is a seller's market. I expect that is going to increase when we see next month's stats. When it comes to home prices in Ottawa, the composite benchmark price, $652,000, down 6% year over year, down 10% from the peak we saw in March of last year of $725,000. So sales are down, new listings are up, inventory about normal. If that trend continues, at least sales being down and new listings being up, I think we're gonna see months of inventory increase. So let's play a little game. I think next month, months of inventory is gonna be about 2.5 in Ottawa. Put your guesses below in the comments and we'll see how close everybody gets. When I'm talking with agents though, they are saying that it was actually busier than they expected it to be. There's usually a typical slowdown in June. Now, of course, we saw a bigger slowdown than probably was expected, but they were kind of a little surprised by the amount of market activity that they saw when they didn't really expect it to be busy. Now that we've had 2 interest rate hikes, we're probably going to see that downward trend continue in Ottawa. In Montreal, the 3,600 homes sold in a month is down 18% from the 5-year average. Typically about 4,400 homes are sold in a month. And the 5,200 homes newly listed for sale, well, that is down 6% from that 5-year average of about 5,500. But when it comes to active inventory, there's 15,800 homes currently for sale in Montreal. That's up 3% from the 5-year average. Usually about 15,400 homes are for sale this time of year. So months of inventory in Montreal is 4.4. That's right in the middle of a balanced market. When it comes to home prices in Montreal, the composite bench price is $516,000. That's down 5% year over year. It's down 5% from the peak of $550,000 we saw approximately a year ago. But it's also a slight drop off from last month. Now, keen-eyed viewers will know that last month I said the composite bench price was about $527,000. And that's because this is the time of year and the Canadian Real Estate Association goes back and makes some slight adjustments to the composite benchmark price, and they readjust the numbers a little bit. And now the percentage change, whether it's 5%, 10%, whatever it is, doesn't change, but those numbers will change just slightly. So for example, like I said, last month it was $527,000. Canadian Real Estate Association revised that down to $517,000. With inventory up and sales down, is it any surprise that home prices dropped a little bit in Montreal? It isn't to me. That's kind of what I would expect to see. But when I'm talking to those agents, they tell me that from late June to early August, the market is very quiet. So I expect that we're going to see low numbers again next month. The tell is going to be what happens after August. Do sales and activity pick back up? Now, when they're also talking to me, they're saying that the downtown and surrounding area condo market is really slow right now, but homes that are listed a little bit below market value, those are still seeing a lot of activity. Multiple offers are still happening and they're selling quite quickly. In Halifax, they had almost 600 homes sold last month, but that is down 8% from last year. The 675 homes newly listed for sale is down 22% from last year, and the 814 homes currently for sale is up 18% from last year. But months of inventory is at 1.4. That makes Halifax the second tightest market in Canada when it comes to months of inventory. When it comes to home prices in Halifax, the average home price, because they don't have composite benchmark price for Halifax, $583,000. That is a new all-time high for the city of Halifax. I'm talking to real estate agents in Halifax. They're telling me that June was a really busy month, a lot busier than they expected. Things were really ripping along. Now that we're 2 weeks into July, things have slowed down. Now, part of that is absolutely seasonality. Things are typically slower in July in Halifax, but there's also the fact that we've had 2 interest rate hikes and the possibility of more has cooled off buyer interest. Although at the end of the day, it always comes down to supply and demand. And right now in Halifax, there's very little supply. There's your July Canadian real estate market update. If you love learning about Canadian real estate, you might want to also check out my weekly news recaps. One of those is right there. As always, please give this video a like if you enjoyed it. Hit the subscribe button to keep up to date on the Canadian real estate market. Leave comments below so we can chat in the comment section. And thank you very much for watching.